Hey everybody, taking a look at the S&P 500 and the options to trade on it as we get ready to start week 2, February week 2, 2020. Here is our S&P 500 roadmap. And here is the week that was, February week 1. Quite a move up. Okay, we had this, this final week of January here where we're kind of like stuck in a rut, and then we sold off hard on January 31st. We back tested and held above the low that we had made earlier in January, so we've really marked a good solid line in the sand here along 32.14 as our low so far for the year 2020. And then we came in and we gapped up open on Monday, on the first trading day of the week for February, week 1, and we traded all the way up here to 32.68, and then we backed off and sold off quite a bit of the day's range, a little more than half of it. I guess on fears of, heading into the Iowa caucus that night. Well, nothing came of the Iowa caucus because they couldn't even get the votes tabulated, so we gapped up open on Tuesday. Now, there was something more to this than just a relief rally about the caucus. There was also an effort being made to fend off a bearish cross that was about to happen with the simple moving averages. And when these bearish crosses are allowed to happen, we wind up with another leg lower. And the market clearly was not ready for that. Maybe only sold off down to here to get some price improvement. Maybe deal with some heavy short call bets that were going on to end the month. But whatever it was, it did not want to see this cross happen. It did not even want to break the 50-day on this sell-off over here on January 31st. So we had this huge gap up that specifically targeted itself to land on the simple moving averages. Here was the open, and we just gapped up and we went. We never looked back at the low of the day because we couldn't. We would have, undone the magic spell of undoing this bearish cross to begin with. Okay, then as we got to Wednesday here, we gapped up again, but this time we dipped back down into that gap a little bit. Here's where our open was, so this gap was all the way up here, but we dipped down into it a little bit. First sign of weakness, and then on Thursday, the day that we printed our all-time high, we had already been up about 10 points higher than this in futures overnight. We had already come down off of that high on futures, and we opened and we started working our way. We gapped up open, but we worked our way down and filled the gap right away. But we reversed literally right in line with the previous day's close and came back, and we've put in our all-time high and our all-time closing high. Oh, there's goes my cuckoo clock to ruin my video. Anyway, we put in our all-time closing high and our all-time high, but we still have something unresolved on ES. And one day we're going to resolve that, and it could be a day that we come in and we gap up open, like what we saw here and what we saw here this past week. And you don't want to be loaded up on puts with all the simple moving averages moving up, not moving down, but moving up, and this unresolved all-time high sitting up on here. It's hard to get committed to puts before that is taken care of, because you could be walking into a 10-point gap up open one day, and that will ruin everything that you've got. So here's the deal with next week. Let's take a look really quickly at the options. We can see that, let's take a look at it volume-wise. Okay, volume-wise on the put side, there was some really good volume, pretty good volume at the 3300s. You can see there was also some very heavy volume at the 3275s. And on 3275, what does that rhyme with? That rhymes with getting down here to back test the halfway back for 2020 and the 10 and the 20-day simple moving averages. It also happens to match volume with somewhere in the same neighborhood as these 3250 calls. And the 3250 calls, what do they have to do with? They have to do with that first strike that gets you to a new all-time high. And also we know that we're going to be at about 3260 when we resolve that high with ES, according to the spread that we have going right now between the futures and the S&P 500. So I went ahead and I bought 3350 calls as I posted, and then after hours, I went ahead and I sold short. I ended up selling short the 3360 against that just to collect some credit, so that for the 1120 that I spent for this option, I collected $7 credit for this, so I'm only $4.20 liable, to carry this in case we come in and we're flat or a little lower on Monday, and we trade down in here, okay? But over here on the puts, like I said, I thought that this was interesting that this 33.50 and this 32.75 match, because it seems to me like the market is sort of like drawing a line in the sand there. We're either going to run above 33.50, or we're going to end up falling back down here and maybe filling this gap in and testing that 30, that maybe filling this gap and testing and looking below it and testing the 10 and the 20-day simple moving averages. And if we are going to sell off on Monday, it's going to be an open either below where we closed on Friday and then breaking Friday's low, or we're just going to open below Friday's low. So what you want to be looking for in futures overnight and coming into the pre-market on Monday is, are we above or below like 33.20 to 33.25 or so? That means we're going to be right in here. If we're trading at 33.30 on futures in the pre-market, that means we're going to be opening higher than where we closed on Friday, and I think that means we're going to head right up off of the open and maybe work on filling this gap to the all-time closing high from Thursday and working on resolving that high up there on ES from Thursday night at 33.57.75 to get us just over 33.59 on the S&P. Okay, I've done so many versions of this video, I can't remember whether I talked about my rationale for why we are probably going to trade up over 3,400, but just in case I didn't say it yet, I think that that's going to give us a chance. I think that we could trade up to 33.60 and then get sucked right up towards 3,400. And the reason being is that that's going to be a good, clean 200 points on these lows that we made down here at 32.14 to 32.25 for January and February. And that will give a nice 200-point runway for the market to come back and back test and hold those lows. Because right now, I think that if the market pulls the plug now, we're going to be in for maybe a much bigger sell-off than we think. We're probably going to break down below 3,200 and finally go deal with some lower levels and some things that have gone on the chart below 3,200. And we'll cross that bridge when we get there. But in any case, that's my rationale. I think that we're going to go up a little bit higher first before we come back down lower. Okay? I hope this all makes sense. Have a good rest of your weekend. Good luck and good trading.